I know I picked a very bad week to have a bit of a break, but I'm back. However, it does feel like we've kind of been here before, right? We can't control the market, but we can control our human emotions regarding what countries do, policymakers do, and we've got to kind of pick up the pieces. Rates should have been cut. That was problem number one. This has now escalated a little bit further into Japan having its worst ever day. That is a big problem. And we've also got to talk about the war tension. That could also be a problem. It could make oil go even higher, kind of giving me 2020 sort of vibes in a way. But today we're going to talk about how this all kind of came about, all the data, all the technical analysis, all the kind of situations around how to handle this with emotion. And let's just crack on, I suppose. Before I start, please do subscribe to the channel, like the video, and if you like my content, press the thanks button. It means an awful lot. The first thing that realistically kind of somewhat happened is the obvious in the room of, well, job market wasn't great. Downward kind of predictions. It went a little bit wrong, massively, with a lot of things. Not to mention the unemployment rate kind of edged a little bit forward. It's higher since October 2021, triggering economic rule on recessions. Yes, that word, recession. But yeah, that's kind of a problem too. Healthcare, adding to the payroll. There's all kinds of stuff happening here. But we have to be very, very careful with fine grain detail on these type of data points. So when we talk about the lagging data of job data and all that kind of stuff, the fine-grained data that we all go into, the problem we have, I think, what started this kind of off, and I've talked about it before, I put it on my X account, said, I'm surprised by this. The Fed, I think, have waited far too long to cut rates. When we look at this, we look at all the kind of treasury elements and the Fed Reserve and the freaking 2-year yield, 10-year trade, whatever, right? It's all going great until it's not. And we talk about soft landings. It really hasn't happened. It's kind of created a bit of a problem. When we're looking at the fact that the employment rate starting to rise now, that could well be a huge problem. And all these kind of elements around, potential cuts, while the market don't see much chance of a cut before September, the question of whether it's too late, yeah, it's an absolute case. But I'm going to tell you something. This article was wrote on the 30th of July. A lot's happened since then. There's already rumours and echoings of an emergency rate cut happening this week. That will unsettle the market more, in my opinion. That will make it even worse because it removes that credibility factor. And it basically kind of shows signs of weakness. And when we talk about this, the federal cut range, yeah, 59% chance to see that going to be happening in the December's meeting. That has totally, that data is very, very different now. So yeah, that is becoming a problem. But why has this really just changed things? First and foremost, when we talk about big traders, big investors, they spook markets. Sorry, they do. It's like if I mention a certain asset and I do something with it, people shit themselves. I'm not a Warren Buffett here. I'm a very, very small little diddly person. But when someone of this stature, whether you like him or not, don't care, a massive amount of stock has been sold by Berkshire Hathaway. Half of it is, that's a huge amount, right? So that's going to create a bit of a spook. Now, whether this is recession fears or the data-driven fears that this has given us a pending sell signal, it makes you wonder where things are going to go next, right? So we've got to look at that factor. When we think about the Fed, think about the data, we think about the magnificent seven, as they say, in terms of the stock market sell-off, that could lead to people flapping and shitting themselves, and that is a big problem. Yep, entire history. We are basically on a Black Monday point, well, 2.0, which happened last time in October 1987, well before I was born. And we've pretty much done the exact same thing. I'll show you the chart. It's basically a perfect double top. Now, Japan is a saving nation. There's a lot of trade between the dollar and the yen. There's a lot of element around extended living because people in Japan live longer. And their economic policy has been very loose and very bad. Now they might well have to put some action in place. That again removes their credibility. When we talk about liquidity is the problem here. Liquidity is getting removed and people are panicking and people are selling and liquidations are happening. It's getting very, very, very big. I'll talk about the data on that soon. This is why I think it's going to get worse before it gets better, because actions have to be taken. That's going to spook the market even more. I have de-risked a little bit in terms of certain elements around my portfolio, just in case things do hit the fan. Already has happened. It could get worse. If the Fed start doing rate cuts, if Japan start putting in policy measures, if other nations in and around Asia or Europe start doing stuff to kind of safeguard themselves, that's going to create a very, 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 very big problem, and I don't want to be a part of it. Yes, maybe in cryptocurrency we might be not too bad. It might well be a saving grace. Gold might well go up if you're a gold investor. Bitcoin may well go up. Altcoins may get smashed even more. It's just what it is. We don't know. This is the thing. I talk about it all the time. Let's be real here and let's put my full face on it. Why is this real? Because I often talk about things and I say loose comments about, well, you can't really control your investments. You can't really control what is happening other than your own thoughts and your own emotions. This is proving it to a T. If you know what I've been talking about on X, I've been saying certain things. If you look at my previous videos, I've been talking about bull market catalysts. They're here. But I also said in that video, maybe it's the time to wait and chill. Altcoins are not here. Q3 is often a bit crap. But did I foresee this? No, did I hell. Even though I said don't buy altcoins just yet because there's no alt season yet. Dominance is still high, could go higher. All that malarkey, yeah, great, perfect. The reality is, though, I have no idea what's happening because the policymakers don't know what's happening. They've fucked it. They've pressed the big red button and they've popped the bubble, basically. And that is where the problem lies, and we don't know what's going to happen. Bitcoin might be good for this. Bitcoin might not be. Gold might do well, might not. Banks may collapse, they might not. I know, problem. Before I go on, links below to Patreon. It's $5 a month if you want to get the videos. Extra videos, I do 5 extra. Technical analysis, stuff like that. Might be worth just checking them out. So, back to the obvious. I have been talking about this quite a lot in terms of how bad August is for crypto. It's also very bad for the stock market. September is even worse. The S&P 500 in September is terrible month. But the reality is we are following the grain. I kind of got a little bit spooked by the little 70k push that we had. I thought that was really, really good. But it kind of caught me off guard. Should have really just derailed myself and just sold everything then, but obviously didn't. Problem we have is, will it continue? Most likely. This is going to be a rough quarter, I think, until things settle down. But as I say, a lot of good things are coming, especially in the crypto market. And as I said just then, what if people go over to crypto as a potential safe haven? That is a thing. We've never really seen a recession before. That could be huge. And corrections are very much a must in a market of crypto. And let me explain. So I'm really, really pleased that this tweet is out here by Quinton, because I had planned to look at all the corrections over the last couple of years. This is obviously, in my opinion, I still think Bitcoin is in somewhat of a bullish market. Altcoins are definitely not. These are all the corrections. And this is the first time this cycle we've seen a 34% correction. We often do get pretty meaty, horrible corrections. It's just the way it is. As I said, though, this is kind of driven from something else, which is good. I've made a comment on my Discord this morning about how this market's matured a lot more. Back in the day, those corrections would happen, but the stock market wouldn't have sneezed. Nothing would have changed in the stock market at all. So that's good. Everything's from a solar way. That's fine. It makes it a little bit better. But the problem we have is it's how to handle them. Your emotions are going to be huge. In my opinion, dominance is high. I would try and keep as much Bitcoin as possible until things really do change and you start to see those structure change. I'll show you on the chart in terms of structure changes, but you can't just guess nowadays. Like the whole world of altcoins, there's too many of them. Same with the stock market, too many stocks as well. You have to really get your timing right. When we talk about data in terms of like timing, and obviously the trend is your friend, and I have been talking quite openly about it. It looks like short season. As I said before, I didn't feel like this was going to happen. It has happened. It's just one of those things. These are the liquidations. A lot of people do get wrecked. A lot of late longs always get wrecked. A lot of late shorters will get wrecked. What we're getting to a point now is late shorters will probably get wrecked. There will be a little bit of a relief bounce, and that will kind of save people's asses a little bit. The problem is we don't know when that's going to come. You can't just predict it. You can't just buy the dip that keeps on dipping, because one of these times you will get a one that sticks and you will get a one that absolutely melts. It's just one of those things. The big underlying element to this is $1.07 billion have been literally destroyed. And that was in 24 hours. They are like the Ethereum one's absolutely crazy, by the way. Ethereum's got absolutely plummeted. I have bought some Ethereum today, though, weirdly, just for the shits and giggles, really. So be mindful of your risk, please. And the final thing that we really need to take note of is who is buying the dips today. Over the last couple of weeks, BlackRock have been buying in a bucket loads. Fidelity have been removing, but we'll see how things go. Things could get very, very interesting here, in my opinion anyways. The problem we have is we don't know what's going to happen, because this might be the first time they've really got to this point. MicroStrategy are already looking to buy, and raise money, $2 billion to buy more Bitcoin. Fair enough. Obviously, we've got the Donald Trump news with the reserve. We've obviously got stuff like this is huge. So yeah, things are going to get very, very interesting. Before I jump into technical analysis, it might get a bit crazy. A link above, or a link below, sorry, Learning Crypto website. The indicator that I use is available on here. You can get it for free as well. You can also get a part of the Discord. There's a link on the website. Easy peasy lemon squeezy. I'll try not to lose you. So before I go anywhere, let's look at the obvious Bitcoin. All these little blue little symbols and the red symbol here was all the kind of the ones to keep an eye on. They were all short setups that I had, which is really, really, really fucking annoying, because the alerts didn't hit and I missed them all, which is really, 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 really frustrating. But let's talk about Bitcoin more importantly. This is kind of, this is going to sound mental. We've created a new low. I was wrong about certain things, obviously. I was expecting us to retest the range lows at some point in its life cycle, but not in the speed and ferocity of this. I was expecting us to go and retest where this box is. Totally wrong, I know. But I have had a week off as well. When you look at policy changes and how things do matter, when liquidity is drained, things are just going to melt and you just can't help it. But the perfect downtrend is kind of here. We have had a monster run. We have to have a huge correction at some point in its life cycle just to kind of make it more valid. Now, what is interesting here is we have gone to the 382, which is a 51,000. Now, do I think we're going to go lower? Potentially, yes. But I wouldn't bank on just setting my orders here and hoping. The thing is, Bitcoin often gets front run a lot. And as I said just before, what if there's looming fears of stock market crumbles and people wanting to keep their money safe, and the devaluation of certain things could make it really, really difficult. With that said, Bitcoin could well be an answer for a lot of people. So just be mindful of that as a point. So yeah, manage your risk, so to speak. Now, for the first time in a very long time, we are finally hitting this little potential area box. I do feel it's going to go up towards the 618 level, which is around 60%. This is a Bitcoin dominance, by the way. I should have mentioned that. With that being said, it's taken a very, very, very long time. I was doubting that it would ever get this high because of the speed of in terms of it was going there. It's got there. This happens in every single cycle. Now, this gives me a little bit of hope that we've been here before. It's still the cycle sort of situation. Why? We have this every time. We have this massive and then melt. We've had it in previous cycles where we've had big, massive drop-offs and big, massive shoot-ups and then into a big, massive rally. What if this is the rally that sends us? Altcoins go into oblivion. Bitcoin just chills out and then eventually rotation into altcoins and we start getting money flowing into the market. Liquidity first, captures the newbies into retail, and then it starts flowing downwards into this point, and then everything's hunky-dory and we just had a bit of a bump in the road, a correction, so to speak, right? That's obviously one scenario. The other scenario is we continue going higher and Bitcoin is king and everyone goes into Bitcoin and altcoins just get smashed for a lot longer, and then we finally get that drop off, which is rotation. There's too many ways to look at this. The problem we have, as I say, is altcoins have majorly let everything down. Massively, hugely. So that's a problem. I will talk about structure though in terms of the pairs, because I think it's important to note that if you're holding Bitcoin, I would keep holding Bitcoin until you see a very obvious kind of pattern, because I think we need to look at trends. We need to look at the obvious. And I've talked about in my previous videos about like market structure, timing, trends, look, all that kind of stuff. Yeah, we've got to look at that. So this is the S&P. It's currently down 2 and a bit %. Not too bad at the minute. But it could obviously go lower. This is a huge melt up. It's happened. It's one of those things. Another one, obviously the NASDAQ. Yep, hunky-dory. Let's remove that. You could see big, massive correction. But the main thing is obviously the Nikkei. This is huge. If I zoom out enough, you'll see this. This is, when I talked about 1987, we could be talking about potential double tops. Not perfect, but it's enough to kind of give you an idea. This was the last big, massive Black Monday. We're on number 2 right now, right? So it's not looking great. Big problems, right? The other problem we have is obviously the VIX. Yeah, problems. I know. So this has gone up. Volatility. Maybe your friend, maybe not. So as I alluded to in terms of structure, this is Ethereum right now. Everything's looking horrible. So if I look at the indicator, you can get this on Learning Crypto if you want. It's basically a enhanced RSI with trend colors, with trigger points, with divergences and stuff like that. This is basically, on a nutshell, telling us a number of ways is not to buy the shit out of this because it's looking a bit crap. If you look at the 3-day time frame, which is a usually good indicator, for me anyways, I love it, we are lower lows, lower highs, all the way through the trend. Same with this, is kind of following the same thing. We had a bit of a correction up. We pulled above this level for a while, but we were at levels of resistance, right? What we are looking for is this to fully break out and then be acting as levels of genuine support, and also this green above this red line. That's what we're looking for. No altcoin ever at the minute, maybe a 1 or 2, is looking anywhere near like that, which is where the problem lies. So when we're looking at the obvious here, you need to find something with genuine structure that is going north, right? Just the way it is. As I say, there's a lot of, these are random stuff, by the way, not looking good. So we're looking for stuff like that. Stuff like this, where it's impulse pullback and it starts going up. Sweet. We've had that over the course of the year. But most things, as I said, has been really awful. So altcoins are just looking worse. But the main thing to cheat on this, let's just talk about cheating. You can cheat by looking at the total 3 or the total 2 / BTC. This is the overall index. The indicator doesn't work on these, but you can look at the obvious. We are still in a downtrend. The EMA 21 on this is still dying. Why would you want to buy altcoins? You don't want to buy altcoins here, do you? Well, you might want to, but you may not need to, right? You need to wait for it to show signs of life, because realistically, it's just going to keep on melting. There's no real signs of life here. There's nothing that's telling us that we should be aping into this. And I hold my hands up. I've got things massively wrong in terms of my own portfolio for like buying altcoins far too early. Buying altcoins when they were low in USD, but not in the BTC pair. I've openly said this. There is so many bullish catalysts out there, but liquidity is required. Liquidity has been sucked out of something else, Japan market basically, and the dollar's getting weaker. We need a strong dollar. We need recession fears to kind of get put on hold. We need to the Fed to get a grip of the situation, and then things will eventually sort of settle down. Liquidity markets will rotate back into the market. They will. They always do. It's just a matter of when. Problem is, retail are not going to be a part of that. Retail will be the last to jump on the ship. So don't worry. If you're still here, well done. You're a diehard. Well done. Give yourself a pat on the back. Liquidity comes first, rotation, then into the kind of the FOMO, that all kind of vibe, and then retail will come. When things start going higher and higher and higher, retail will start to come. It's nailing this bit. It's hard. So yeah, I am pretty heavy in Bitcoin right now. Bitcoin dominance is getting higher. I'm feeling pretty good. Problem is, not everyone else is. Others.d, back into the buy good assets zone. You know, lower this goes, the more assets you'll be able to buy for your buck. Simple as that. It's looking atrocious. You've got to manage your entire emotion stack. It's hard. And as I say, I have de-risked a little bit. Nothing crazy. Nothing crazy at all. What I've got is what I'm holding. What's profit I've already taken. I've already had a really good, successful year in the grand scheme of things. I obviously live by this stuff. The problem we have is we cannot control what is genuinely happening in this market. We don't know what's coming next. In my opinion, rate cuts will make the market worse. My goal is, and I've said this before, less YouTube videos, more participation in the market, more trading. So feel free to follow me for that. But yeah, hopefully some of you guys have got a bit of clarity of why this global market has crashed in the way it has.